You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And I've got a pair of really good interviews for you today conversations I had last week while I was out in Scottsdale, Arizona at the Deluxe Exchange Client Conference with about 700 people, primarily from the financial services space, some small businesses there as well. A really great display of content and thought leadership in my mind, and including these two individuals, Deidre Campbell, the financial services practice leader of Edelman Smithfield, the PR firm, and Al Pasquale, the co-founder of Scamnetics. So we'll be getting to that in just a second. I want to remind you can always find out more about the Best Innovation Group by checking out our website, big-fintech.com, and you'll see all the interesting things we have going on between the Innovation Club, APIs, AI development, etc., etc. Take a look. I'm sure you'll find something of interest to you. Let me jump in again, our usual kind of roundup of the news, if you consider the Super Bowl at this point to be news. But one of the things that we were looking at, we've talked before about the predictions we made for the year and our bingo card, a little bit more on that in just a second. But one of the predictions was that there would be at least 5 Super Bowl ads that related to artificial intelligence. That one was close, and we have declared that yes, that indeed happened. When we did the survey, or when we went back and looked at everything and saw how other people assessed as well, there were 4 different companies that actually had AI-oriented ads. Meta was one of them, with their built around their Ray-Ban glasses. OpenAI, the standard bearer for artificial intelligence, making their premiere with ChatGPT within the program. GoDaddy, which, the old website that tends to do what Danica Patrick and a bunch of more kind of sexy ads, kind of went in a different direction this year. Act like you know what you're doing was the catchphrase, and they were talking about basically using AI to look like an expert about whatever you were going after. And then, not surprisingly, Google being the other one with their Gemini product around artificial intelligence. But they actually had 2 separate ads. They were different. They both were around Gemini, but entirely different use cases that they basically built out. So I thought that was interesting. You put those all together, you have 5. Oh, I should mention also GoDaddy was actually promoting Airo, A-I-R-O, was the product, which again is a way to build a website through artificial intelligence. So 5 of those, we can check that one off the bingo card. One that we cannot check off the bingo card that we predicted was a return of cryptocurrency to the Super Bowl ad roster. That did not happen. I was a little bit surprised not to see Coinbase or somebody like that. I don't think FTX has the money anymore, unfortunately. I'm not sure unfortunately is the right word now that I think about that one. But anyway, well, there's more about the bingo card, a game you can play along with us if you are interested. And one way you can do that is to sign up for our digital town halls, the CU town halls taking place on bi-weekly on Wednesday afternoons. The next one coming up on February 26th. Those are at 3 p.m. Eastern, noon Pacific. They're live, they're interactive. We love to have conversations about the latest things going on in the credit union and fintech space. cutownhall.com is where you can find out more. If you sign up, you'll also find out a little bit more about how you can pick up your own bingo card and follow along. There will be a couple prizes at the end of the year, but that's not really the point. Take a look at that as well. Another thing that we checked off of the list, I think this was checked off already by the time we spoke last week, but it's developed yet again. Unfortunately, you can only check things off once in the box. But a new CFPB director, I think we've covered before, Rohit Chopra submitted his resignation a couple of weeks ago, and the Treasury director, the head of the U.S. Treasury, Scott Bessent, took the seat on an acting basis for all of about a week. And then he passed the torch over to the newly confirmed by the Senate Office of Management and Budget Director, Russell Vought. And he's done a lot more of the heavy lifting right now in terms of issuing pink slips, taking the signage off the building, telling people not to come in. There's now some lawsuits that have slowed that process down. At first, I thought he also passed the mantle already, but that's not technically correct. Russell Vought still continues to be the head of the CFPB. However, a permanent replacement has been nominated, Jonathan McKernan, who had recently stepped aside from the FDIC board. Apparently because you can only have so many Republicans on the board at once, and when Rodney Hood, our friend from the NCUA, was appointed to the OCC, that left too many Republicans. Jonathan McKernan resigned from the FDIC board and very conveniently was appointed to the CFPB the very next day. So a few new CFPB directors. Check off your bingo card. Another one that we checked off a while back, but a little bit of an asterisk on it, NVIDIA stock, as we know, took a tumble earlier this year when DeepSeek came around. NVIDIA dropped by 10% from its beginning of the year value. So we checked that one off. Well, guess what? NVIDIA stock has virtually gained back all of that. In fact, they are back to slightly above their January 1st, January 2nd price level. They have not gained everything back from their high from the middle of January, but you lost 10%, you've already knocked that one off. Then you get some interesting ones. There was a piece on the bingo card that, frankly, we were having some fun. There's some kind of silly ones, like John Best mentioned. We should have a new merger Tinder app where people who want to do credit union mergers can swipe left and swipe right on different candidates out there. Well, that one hasn't happened yet, but one that I thought was nearly as silly was the campaign promise around the 10% credit card interest cap. And lo and behold, this last week, that was actually introduced in the Senate as a bill. Still just an introduced bill, has to still get to a vote, has to be passed in the House. We've got a long way to go on that one, but boy, that was not one that I had on my bingo card. Let's put it that way. Let's jump into the interviews. As I said, a really good conference from the folks at Deluxe. Full disclosure, I used to work briefly at Deluxe, and I've been doing some work with them for some time and helped moderate a couple of the breakout sessions there. And caught up with a couple people who did other breakouts that I thought did particularly interesting jobs on interesting topics. Al Pasquale, who I've spoken with before at other venues and has been a veteran of this space for some time, is currently working on a product that's got some great traction over the course of the last year or so called Scamnetics. Let's have a listen to what Al had to say. I'm here at Deluxe Exchange with Al Pasquale, with the co-founder of Scamnetic. Al, I've known you for a while, but I first saw you in the Scamnetic era at Finovate back this past fall. I guess that was kind of your coming out of stealth mode for the organization. I gave you a best of show vote, I can tell you that. And I remember at the time I said, hey, I'd love to talk to you some more about it. You said, let's wait till we have a little more. I think you'd literally just gone live, I think a couple weeks before that. So here we are. We meet again at the Deluxe Exchange, and lo and behold, you've got that traction. So tell me a little bit more about Scamnetic.
Yeah, no, I appreciate it, Glenn, and I appreciate your vote. Thank you. Scamnetic actually came out of some conversations that my partner and I were having with banks and credit unions and telecoms a handful of years ago, where there was just a clear need in the market for a scam solution, and it wasn't something working at TransUnion at the time that we had available. It wasn't a focus of TransUnion, right? We weren't building scam products at the time. But at the moment that, or I'm going to say, as we continually heard about scams being a pain point, we realized that looking across the market, it wasn't just that TransUnion wasn't doing anything about scams. No one.
It was a white space.
Exactly.
It's interesting. I mean, it's a great case study of go out and find what the customer is looking for and what they can't find and address it. But just to explain the idea of the scam, it's like, okay, you can remediate after somebody's been scammed, but one of the things I keep hearing, especially, in the context of, older individuals, the notion of, gee, I wish I had some way to identify when something's incoming, if it's, if it's kosher or not.
Yeah, no, that's, I think by far the bigger challenge is prevention. For institutions, I mean, really for any organization, that services consumers, scams are an issue. First and foremost because, your brand can be misused, right? So whether you are a credit union or a bank or a telecom or an insurer or even a retailer, there's a risk that, scams are undermining the trust that consumers have in your organization.
It could be in two directions, too. Somebody could be impersonating your organization,
right,
or it could just be, hey, I count on you to keep me safe about these things, right?
Exactly that. And I think that's where, things come back to, financial institutions kind of a bit more acutely, because ultimately, when the money does leave the bank or leave the credit union, that's the next call that the consumer makes.
That's always the point. Who are you
Right.
going to, when you really find out that you're in crisis,
Exactly.
regardless of whose responsibility it really is, that's the first call.
That is the first call. I think it's just under 70% of scam victims, contact, their financial institution. If they contact anybody, right, they contact their financial institution first and foremost.
So you are marketing primarily to and through financial institutions? Is that your go-to-market strategy?
Yep, we're B2B2C. So we sell through financial institutions, but we also sell through telecoms, insurers. We have partners as well in the identity protection space, in the consumer cybersecurity space.
Is it white label or is the Scamnetic name visible to the consumer?
Generally as white label. We have a sub-brand for the product. It's called No Scam, KNOWSCAM. So some of our partners do use that branding, but it really is up to them because they can take our technology, we can co-brand the technology, we also have APIs. So we have clients who integrate with their digital platforms. We actually have one client that's integrated our APIs into their chatbot. Right? So you can just ask the chatbot.
I got this thing, is it real?
Scam? Exactly that, yep.
So what is the consumer experience? If your financial institution offers it, does it kind of basically automatically get attached to the account, or is it an opt-in for the consumer?
Yeah, so I think it depends on how the institution is going to roll it out. So what we found is that larger institutions generally give it to everybody as a benefit. And we're working with those institutions to get the product into their digital experience. What we found is that consumers, of those institutions, almost unanimously, want it as part of the experience. They've actually done studies, right? So we have that straight from the consumer or from the customer. Now that being said, right, that's great if you're a tier one because you have the resources, you have the muscle to get it done. But if you are, a mid-sized institution, or smaller, then a fully integrated experience tends to be a pretty heavy lift, right? You usually have to rely on your outside vendors to get it done, which incurs a lot of cost, and it may not even fit with how you want to roll the product out. So what we found is that for some smaller institutions, they do things like resell the product, right, to make non-interest fee income. So we have one partner who's doing that. We have another partner who is actually in the credit union space, who is looking to package it up into a premium checking account.
Great.
Right, as a benefit. Obviously, they can justify those fees. But in that case, actually in both cases, we're not integrating. It's a standalone solution, but we co-brand it. Right, so we put the institution's brand alongside ours, and that way we can roll it out very, very fast.
And what does it look like if you're in the digital banking environment? Are you asking questions like, "Hey, I got this email. Is this real?" No. Is it an automatic pop-up? "Hey, you just got this inbound thing. Don't believe it."
So if it's part of the actual digital banking experience, how you're most likely to kind of set it up is to go into your security center, typically where you have like two-factor authentication, alerts, notifications, and you turn on your scam protection. At which point then you get prompted to turn on what we call auto scan, which is automatic protection of things like your emails and text messages. Right? The idea being that while it's all well and good to give the customer the opportunity to scan things and try to be protected, the catch with scams is people don't know when they're being scammed.
Exactly.
Right. So you can't rely on them to exercise that sort of judgment. And so instead, what we try to get them to do is to let us, watch their back on an ongoing basis.
And this is across the board, not just because you're in the digital banking environment. This would be for all your incoming texts, all your incoming emails, which is necessary. That's where the scam happens.
That's it.
Wow. Okay. So that's I don't believe you're doing anything direct to consumer. I've heard a couple people, not to stereotype, gee, I wish I could get this for my 87-year-old father.
Right.
I guess wait till your institution or telecom or whoever is actually offering it is the path.
That is it. I mean, we do have partners who resell to consumers, so we can't make those announcements yet.
Gotcha.
But they've taken our technology, embedded it, and they're rolling it out now.
Okay.
And so when they make that announcement, we can go out and say, hey, if you really want it, you can buy it, as part of X, Y, or Z.
Gotcha. And I think I heard you say you're live with, is it 14 FIs or 14 customers overall?
So we got 14 clients signed at this time. We have been implementing them since September, but the FI clients, most of them go live at the start of Q2.
Okay.
Right?
And
takes a little longer to get them up and running. They're mostly tier ones, but we do have some tier twos, tier three, but then we expect to get or to onboard our first kind of credit union clients starting in Q3.
Okay, so, and that's, from a credit union standpoint, obviously, those are likely not going to be the really big players. Are you going directly to the credit unions through the leagues or the resellers, or how do you get to them?
So, I mean, it's always the chicken and egg kind of problem, right? Or it's analogous to, getting credit, right? You can't get credit until you have credit, that sort of thing. But so with credit unions and the QSOs and then all the rest, we know we have to prove that there's demand there. And so we're starting with selling direct, but that's not going to be the go-forward model for the business, right? We want to find partners to work with, to get it out, to credit unions en masse. But we want to demonstrate that demand is there.
Well, and based on what I'm hearing on the street, just like your own customer discovery, the demand is there.
Oh, yes.
And the need is there, whether it's demand or not. This is one word kind of aligns nicely, that the need and the demand, people realize they need it, which is nice. So I got a chance. I guess it's still probably a good opportunity to repost the Finovate video as kind of a tutorial of how people can see how this kind of starts. Anything else? Just the Scamnetic website if people want to find out more?
So they can learn more at the Scamnetic website. We have a sales video you can actually find on YouTube that walks you through the product, which it's really slick, short, gives you a good explanation of how it works. There's other things that we do that we haven't necessarily covered in this conversation, so you can learn more about the other features that we have. I would direct people to take a look, check it out, and if there are questions, reach out to us, and happy to give them a demo.
Great, and as I said, it obviously caught my attention when I saw you at Finovate. So Al Pasquale, co-founder at Scamnetic, great start, congratulations, and be following along.
Thanks, Glenn.
So at the start of the conference, Deluxe CEO Barry McCarthy mentioned that Deluxe had done an audience poll of the attendees in advance of their arrival, asking about their top concerns in the fintech and banking space and basically business environment overall for the coming year. And the three top concerns that they cited were interest rates, which again is such a fascinating thing to me because no one was thinking about that all that much until recently. New technologies and digital transformation, and data security, which I would take to include fraud and cyber issues and things along those lines. So I find that Scamnetics is a really interesting case here in that it really combines, two of those concerns, new technology and data security. But I also love the way the voice of the customer just really comes through. You got a good idea, and at the same time, you're talking to people, and how about that? That's exactly what they're looking for in the marketplace. So best of luck to them. We'll obviously be following along. I'm sure we'll be seeing more from Scamnetic in the not too distant future. If you've listened to me before, you know that I am a data hound. I love data. I also love the concept of the role that trust plays with financial institutions. That made it great timing to hear what Deidre Campbell has for us in terms of the Edelman Trust Barometer, something they've been doing now for, I forget if it was 20 or 25 years. But it's a really kind of a downer message, quite honestly, in the broad strokes. But we have a little bit of a silver lining here that it actually does show that trust is still important, and we've got something to work with in the financial services space. With no further ado, my conversation with Deidre Campbell of Edelman. I'm here with Deidre Campbell, who is one of the leaders of the financial services practice at Edelman and a frequent spokesperson for their Edelman Trust Barometer. Deidre, we spoke, I think it was last fall. It was the first time that I'd become familiar with the Trust Barometer, and we've got new hot off the presses. I guess every year you release your information at the Davos, the World Economic Forum. So this is brand new data, right?
Yes, absolutely. It's brand new data. This year, what the key theme that was really unveiled was this notion of a crisis of grievance. And when we talk about grievance, we really found a world that was mad about a lot of things. The barometer measures trust in government, in business, in NGOs, and the media. And we found that the more aggrieved each of these audiences are, the more they lean into these institutions in different ways. So for example, the more aggrieved an individual is, the higher that individual's expectation is of business to do more to ameliorate situations that are causing economic and personal stress. And the more aggrieved individuals are, the less economic optimism they have, and the more dug in they are on their own opinions, less willing to be swayed or to be trusting.
I think we can certainly see that. And I want to hone in mostly on the U.S. This is a global survey. I think, was it 28 countries, I believe?
Specifically, it is 28 countries and 33,000 respondents to an online survey.
So I want to focus on the U.S. piece and specifically the financial services piece as well. And I think it's also telling that this survey was in the field in the months of November and December, which obviously coincides with the U.S. election. But you also mentioned and pointed out there's several of the countries actually were in election cycles this past year as well. So that obviously came into play. One of the things I find really interesting is that business, of those categories that you mentioned, business is the most trusted.
Absolutely. Business is the most trusted in 15 of the 28 countries that we survey.
Including the U.S.
Including the U.S. In the U.S., the trust number is at 55. That is really at the mid-range of neutral and hasn't moved much in the last few years.
But it is, and I think you said 60 is kind of the threshold that you think of something as achieving trust.
Exactly.
Right now, none of those categories have trust. That is the highest of the bunch, right?
That's correct. In the U.S., business and NGOs are in the neutral category, and media and government are in the distrusted category.
Now, on the positive side, and this one really surprised me, and it's actually a positive trend, not only a good number, but a positive trend. Financial services is in the trusted, and it actually just made it over that threshold that you consider it trusted based on a gain this year, but it's on an upward trajectory for some time now.
Yeah, it's great. It's really great to see. Globally, financial services reached the trusted category last year. In the U.S., this is the first year financial services is in the trusted category. It's up 7 points to get into the trusted category, which is really quite a lot. And we've seen this steady trajectory into trusted categories since 2012. And really sort of we credit this recent spike over the last few years to how well the banking industry and the financial services industry held up during the pandemic.
So that's still, we're kind of living on the halo effect of those actions of 2021 and that era there.
Well, and the reforms coming out of the global financial crisis, leaving us with a banking system that could survive that kind of global pandemic. I think the industry got a lot of credit for how it handled PPP. Mm-hmm. I think people found that when they turned to their digital banking products for the first time out of necessity, they worked and they were reliable. And I think they felt like the financial system overall had improved and was able to support individuals and businesses through this, unimaginable time. And
I think you mentioned this, the first time you actually tracked financial services specifically as a sector was, I believe you said 2012, which obviously is in the wake of the Great Recession. And it wasn't doing great then, but it's been on a kind of a steady, slow climb ever since. And this was probably the biggest bump, which is kind of ironic, right at the time that we're looking at kind of altering the regulatory environment.
Absolutely. It'll be interesting to see where all of that falls. But I think that when people look at financial services, certain banks have done the best out of all of the subsectors.
You mentioned, because again, financial services gets broken down into banks versus insurance companies, et cetera. And banks, again, lead the pack.
Absolutely. Banks lead the pack by a 4-point margin. Personal insurance as well as property and casualty insurance are trusted globally. I think it gets a little fuzzier when we start asking about financial advisory, investment management, financial technology. It's a tough answer globally because they show up different in so many countries.
Yeah, I was going to say that's an apples oranges. And I do remember that, again, globally, I'm curious what it looks like in the U.S., but crypto is still in the distrusted category. It's still on an upward trend.
Yeah, yes.
But or at least at this point, it's not. I don't think it's been a consistent upward trend after the crypto winter. I'm sure it took some hits.
Totally. We called it the trust crash.
There we go.
And there was a crypto crash. But, we'll see. Speaking of regulatory environment, people are all watching to see what's going to happen with regulatory and crypto.
Exactly. Another piece that I found a little, surprising, counterintuitive, employers. The individual's employer is one of their most, if not their most trusted entity. And again, that's an area that you mentioned that financial services companies actually outperform as an employer.
Yeah, absolutely. And it's my favorite data point because for years we would say of all the sectors that we survey, financial services is among the least trusted. However, for this entire period, it is the employees of financial services companies that trust their employer more than any other sector that we survey. And it's like 85. It never wavered. It never wavered during the pandemic. It's just sort of locked in.
It's like you said, you've got an army of ambassadors at the ready.
Mm-hmm. Absolutely. And I think that the fierce loyalty also has to do with coming out of the global financial crisis, because those individuals, those employees, they know what the mission of the company is, and they know the goodness that the banks and financial systems are putting into the world to create safer, more economically stable families and individuals and businesses and communities and markets.
So, this whole report, the Edelman Trust Barometer, is freely available on the website. We'll post the link to it. I would love to get more financial services kind of detail. And you mentioned that you actually do individual sector-specific reports kind of gradually over the course of the year. And I believe you said this one, the financial sector one, is released in May?
We typically launch it at the Milken Conference, the Milken Institute Global Meeting in May. And I believe we're on track to do that again this year.
I can't wait to see the details, and we'll either disaggregate it and kind of demystify it ourselves, or if I can, I'll give you another call and we can talk again.
Thank you. It's always a pleasure. Thanks for having me.
Yeah, so Deidre Campbell from Edelman, and as I say, we'll have the link up to the report at the Edelman website.
Wonderful. Thank you.
Tying it back to another piece of the Deluxe Conference, Derek Jeter, Hall of Fame baseball player and now Capital One pitch person, was one of the keynote speakers. And yet again, I wind up thinking, okay, we have a celebrity that has star power, but what do they really have to tell me? They had a lot to tell me. Derek Jeter was really impressive. And one of the things he said about kind of assessing other people in the locker room and whatnot is, I wrote down this quote: "You can't fake passion." And what I'm hearing here from some of this is the evangelism opportunity that we've got with the representatives of the financial services space overall seems to be pretty solid. And I think we'd all agree that if you think about it, credit unions have a distinct advantage in that dimension as well, that they tend to be even more bought into the cause than probably your typical large traditional national bank. So again, good material to work with, and something that I'm sure we'll be talking more about. I'd like to hear more of those kind of conversations, for example, coming up in a couple weeks here at the Government Affairs Conference. John Best and I will both be there, and if you happen to be coming, please do drop a note. We'd love to track you down there. We'll be having some more conversations both on the CU Town Hall on February 26th, as well as one of the big casts before then, kind of talking about pre-gaming, for lack of a better word, before we head out to Washington, D.C. for the Government Affairs Conference. With that, another episode of the Big Cast in the books. Again, my name is Glenn Sarvati. You can find my firm 154 Advisors by reaching out via the Best Innovation Group website, big-fintech.com. You'll also find me on LinkedIn. You'll find the Best Innovation Group on LinkedIn as well. You can find, again, the Best Innovation Group, our Grand Poobah John Best, at Big FinTech or at JB FinTech. We've got a Blue Sky presence, and there's more on that coming very soon. I've promised that one before. We'll be having some more details on what John's got worked up for Blue Sky coming up in the not too distant future. You can always find out more about the Best Innovation Group at big-fintech.com. You'll find the media tab there, and you'll find lots of past episodes, and you'll find show notes, whether you're listening here to us via the website, via Spotify, Amazon, Apple Music, etc. We've posted links to Scamnetic, the Edelman Trust Barometer, our story around the bingo card, the CU Town Hall, anything that we've discussed that we might want to drill down a little bit more on. Take a look over there and you'll find some links. And if you don't, just drop us a note. We'd be happy to have a conversation and point you in the right direction for some of the other content that we see here. Speaking of which, we tend to have new content every Tuesday, and we will next week. If you subscribe, like, whatever you do, or just come back to the website, please drop us a note. And if you, like I said, if you register for the CU Town Hall, you'll get a quick weekly mailer from us as well with the latest content that we've got out there and a link to take you right there. With that, again, my name is Glenn Sarvati. The company is the Best Innovation Group. The podcast is called The Big Cast. We hope to see you again next week. Thanks for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech. Email info@big-fintech.com. or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.